Hey guys, good morning. It's Angelo, Christian Financial. Thank you so much for watching Real Estate Insider, our podcast where America goes for funding. For the last 20 years, your direct nationwide lender specializing in commercial, residential. Today we're talking about first-time buyer tax write-offs. We always talk about the first-time buyer loans, but did you know there's also opportunities for first-time buyers for tax write-offs? So we're taking a little bit different spin because normally we talk about loans. Today we're talking about the tax write-offs and the benefits. If you are a first-time buyer, some of the things that you can actually write off on your taxes. Now, we're not a CPA, we're not an accounting firm, but we are aware if you are a first-time buyer and you just got a loan from us, there are certain things that you can write off on your income tax as deductions. You can obviously verify with your tax accountant, your CPA, to get more information. We just want to make you aware of what's out there, that there are tax write-offs that you can actually use to help to reduce your tax liability. A lot of first-time buyers are not aware of this. So the first thing is, if you did buy a home and you are a first-time buyer, your tax credit that you got, if your lender gave you a tax credit, you can use that when you file your income taxes. So let's say you got a $2,000 tax credit, you can use that as a deduction when you file your taxes. Just ask the lender that you went with, if they gave you a tax credit, you can apply that tax credit towards your income filing to reduce your tax liability. That's the first thing. The second thing is if you're a first-time buyer and before you've rented and now you're filing your taxes for the first time when you have a mortgage, the interest payments that you're making every single month are a tax deduction. So they reduce your tax liability. Let's say that you spend $500 a month in interest on your mortgage. That $500 a month in interest equals $6,000 a year that you can file as a deduction on your income tax, okay? So this is a really, really important thing that you have to be aware of. And if you own many properties, you can have a huge deduction. There's also depreciation. If you have depreciation on your home, you can file depreciation to reduce your tax liability. If you had repairs or maintenance done on your home, you can add that as a tax write-off. So you have all these different things that can reduce your tax liability. A lot of people that, they after paying for all their bills, paying for all their costs of living, they don't have a lot of money left over to pay, Uncle Sam. So you got to make sure that you're aware of all your tax deductions, because there's a lot of opportunities for you, and you obviously want to be fair and do it the right way. And like I said, you're going to talk to your CPA, talk to your accountant, but make sure that they're aware that if you had home improvements, you had repairs done in your home, depreciation, the mortgage interest, any tax credits. If you paid discount points when you locked in your interest rate, discount points are a tax write-off. Let's say that you paid 2 points to buy your interest rate when you bought your house. That's a tax write-off, guys. So these are 5 key things for first-time buyer tax write-offs that you guys got to be aware of. So remember, we're a direct nationwide lender. We've been specializing in mortgage lending for over 2 decades, helping hundreds of thousands of people. Awesome reviews on Google, very happy customers. So please reach out to us, call or text us at 832-431-6331. It's where America goes for funding, guys. Call or text Angelo Christian. Thank you.